Good afternoon, everyone. Today's webinar is going to start in 3 minutes at 16 p.m. China time. Thanks for your patience. Good afternoon, ladies and gentlemen. Welcome and thank you all for taking the time to join us in this lovely afternoon. My name is Chen, representing International Department of Nanhua Futures. In the next hour or so, I will be your host and accompany you to have an in-depth journey regarding QFII with several of our speakers. As you already know, the regulators and onshore exchange has jointly announced that starting September the 2nd, QFII participants are officially, legally, and eventually approved to engage in the trading of onshore futures and options, which is certainly an excitement for people like us who've been waiting for quite a long time. So right after the announcement, there were quite a few inquiries came to us saying how confident you are this time that this is a real deal rather than another false alert. So frankly, we were not confident at that time because for a lot of historical reasons. And as time goes by, along with some process flows between custodian banks and the exchange, we believe we've got enough evidence to proving that this is happening now. And I'm sure this is going to be covered by our speakers later on. So speaking of which, we're honored to have Yiping Yang representing SHFE, Iris Gao at DBS China, Maddie Liu at DBS Security, and my colleague Mara Wong at Nanhua Futures, as well as our old friend Anthony at CQG to join us as key speakers today. So a quick brief of today's schedule. There will be 4 consecutive sessions presented by our speakers and no QA sessions until the end of the webinar. Hence, if you have any questions, please leave it to the end, but you're more than welcome to bring it up in the chat room anytime you want, and we will try to have all the questions answered if time allows. Okie dokie, now let's welcome our first speaker of the day, Yiping Yang, the Associate Director of the International Cooperation Department of SHFE and INE, who is responsible for international cooperation, overseas marketing, as well as investor education of the exchange. Hi, Yiping. I'm going to pass you the host, and you may start your session anytime you want.
Okay, thank you very much for the introduction. Thanks Nanhua Futures for having me here. My name is Yiping. I'm from the International Cooperation Department of SHFE. Today, I would like to share with you the opening up process of SHFE and the new development in QFI schemes. So talking about the opening up process, we could quickly look at the opening up timeline. Internationalization of SHFE started in 2013 when Shanghai International Energy Exchange, in short, we also call INE, was established as SHFE's international platform to list its international products. In the next few years, relevant policies on FX, taxation, customs, etc., were released, and INE completed its overseas registration in Hong Kong and Singapore. In March 2018, Shanghai Crude Oil Futures was listed on INE. This was China's first commodity futures product open to overseas investors. So until today, 5 international products, also called the specified products, have been listed on INE, accounting for more than half of the total number of international products in the country. This is an opening up model based on its products. Almost all overseas investors, no matter whether he is an individual or institution, financial company or commercial company, can trade international products. As mentioned before, on September 2nd this year, SHFE, INE, and with some other exchanges jointly issued notice that clearly allows QFI to invest in commodity futures and options. So different from the international products mentioned earlier, this opening up model is more based on investor type, which is QFI. So similar to international products, it also indicates that the opening up of China's futures market is accelerating. Since 2018, both the number of overseas investors and the trading volume of INE products have seen significant increase. Overseas investors from more than 20 countries and regions across 6 continents have participated in INE market. The number of overseas accounts have been increasing year on year. At the same time, we have 3 overseas special brokerage participants, 76 overseas intermediaries have been registered with INE, covering 10 countries and regions. These brokers together introduce global investors to our exchanges. In the first half of this year, under the combined impact of pandemic and geopolitical issues, the trading volume of most domestic commodity exchanges declined, but INE went the other way. We can see from the chart, the average daily volume of all INE products showed a year-on-year increase, which is a highlight both for the exchange and also for the futures market as a whole. In recent years, we have explored diversified form of internationalization. For example, we have different opening up models like specified products and QFIs. We also have cooperating with overseas exchanges, enriching market management tools like TARs and options, and various reference prices like market price, monthly average settlement price, etc. In addition, we are expanding our delivery service overseas. So low sulfur fuel oil allows cross-border tick delivery business. Rubber and copper have multiple overseas registered delivery brands. So thanks to these efforts, we've won a lot of international awards, such as the Derivatives Exchange of the Year, Best New Derivative Contracts, etc. We've also won some prize this year. Back to the QFI scheme. This was introduced first in 2002. So in the next 2 decades, the QFI scheme has undergone several rounds of modifications, including the access threshold was lowered, the investment shareholding ratio was relaxed, the asset allocation ratio was removed, and the total investment quota was removed. In 2020, CSRC, PBOC, and SAFE jointly published the new QFI rules, consolidating the 2 measures of QFI and RQFI, and expanded the investment scope to include commodity futures, options, and stock index options. So after 2 years, we now see the products available to QFI announced on September the 2nd. So looking back, the QFI reform process was also a policy relaxation process. The opening up is gradual, step by step, but the direction did not change and will not change. So for this slide, lays out the major policies and rules on QFIs, including those at the regulatory level and the exchange level. But please note these are not exhaustive. At the regulatory level, it mainly involves the rules released by PBOC, SAFE, and CSRC, which was touched upon earlier. The rules on CFMMC are mainly about requirements and operational guidelines on account opening. And at the exchange level, though we have revised the trading rules and the rules on designated depository banks in November 2021 to accommodate QFI participation, most of these rules applied to QFIs are the same as those applied to special corporate clients. So in other words, the rule system applies to QFI is mature, nothing new, and efficient for years. According to the notice released on September the 2nd, QFIs will be allowed to invest in additional 41 futures and option contracts, including 23 futures contracts and 18 option contracts. Most of these contracts are closely linked to the overseas market and have good liquidity. For SHFE and INE, 16 contracts are open to QFIs, including 11 on SHFE and 5 on INE. So those covers precious metals, non-ferrous metals, ferrous metals, and energy products. Compared with other exchanges, we have the largest number of products open to QFIs. Besides that, only 9 specified domestic products are open to investors. So this is indeed a huge step in the opening up of the market. We've also done some analysis based on the list of QFIs released by CSRC. So now let's look at the profile of QFIs. As of July 2022, there are 705 QFIs. Most of them are from Hong Kong, US, and Singapore, accounting for 37, 12, and 10% of the total number, respectively. Since the release of the new QFI rule in September 2020, the number of QFIs have increased by about 40% from around 500 to 700. This gives a flavor of the enthusiasm from overseas investors to invest in commodity futures and options. In terms of the nature of the institutions, most of them are banks, fund asset management companies, security firms, and trusts, with fund and asset management companies being the most. Currently, overseas investors can access Chinese futures market mainly through the following channels. First is to set up a wholly foreign-owned enterprise in Chinese mainland, which we also call WFOEs, and participate as a domestic client. Second is to trade specified domestic products as an overseas client through a domestic futures fund member, OSBP, or an overseas intermediary. Third is to participate through the QFI scheme, which is the main topic today. And the fourth is to participate through OTC cross-border financial derivatives via securities companies. Well, this table briefly compares the QFI channel with the specified product channel, which is also the international product channel. So participants under the QFI channel are overseas entities with QFI qualifications, while overseas participants under the specified product channel are broader in scope, including overseas individuals, overseas institutions, including financial institutions, including commercial clients. So apparently, QFI needs to obtain qualification approval from CSRC in advance, but specified product channel does not have such requirements. Here, we've got a gentle reminder that for those who have already got QFI before September and want to start trading commodity futures, they need to first go to CSRC to modify their investment plan and add commodity futures and options to the investment scope before applying for trading code. In terms of account opening institutions, QFI clients need to open accounts through domestic futures firms like Nanhua Futures, while under the specified product channel, overseas clients can open accounts either through Nanhua Futures or their or INE's overseas special brokerage participants, or our overseas intermediaries, including Nanhua Singapore, Nanhua UK, etc. In terms of margin currency, QFIs can only use RMB as the margin currency, while participants under the specified product channel can use US dollar as margin in addition to RMB. In terms of investment products, the scope of QFI channel is broader. Finally, in terms of physical delivery, currently QFIs are not allowed to participate in physical delivery. So for more details, please refer to regulation on the administration of physical delivery business for special corporate clients of SHFE and of INE. Whereas under the specified product channel, some clients can participate in physical delivery. At present, a lot of general corporates, especially large commercial players, are already actively trading in physical delivery. Finally, we've listed the basic information of SHFE products accessible to QFIs, including the listing exchanges, contract size, trading hours, as well as the liquidity information. So we see that the night trading hours vary from product to product. They all start at 9 p.m. Precious metals end at 2:30 a.m. Non-ferrous metals end at 1 a.m. and ferrous metals end at 11 p.m. So for more details, please visit the official website of Shanghai Futures Exchange to learn more about these contracts. Going forward, we also plan to make more English investor education materials available on SHFE products. According to our survey, crude oil and copper are the most popular products among overseas investors. So today, please allow me to say a few words briefly on our energy and copper products as well. First is the energy products, including crude oil futures and options, as well as low sulfur fuel oil futures are available for QFIs. We know more than a dozen of international exchanges have launched crude oil futures. Among the most famous are Brent and WTI. So how are we different? First is the good liquidity and steady growth in market size. In 2021, both the trading volume and open interest of SC futures are pretty high. Its market size is second only to WTI and Brent. Institutional investors account for over 50% of average daily trading volume and approximately 70% of the open interest respectively in 2021. These numbers are among the highest among domestic futures products. Overseas clients' contribution to trading volume and open interest keeps increasing year on year. Secondly, SC is a better indicator of China price. On one hand, SC demonstrates very high correlation with Brent and WTI. On the other hand, it has also shown some independence in price fluctuation. For example, in 2020, as the COVID was brought into control earlier in China, SC prices also demonstrated less decline and earlier rebound than overseas futures products. So SC gives an accurate picture of the supply and demand changes in China, which is the largest crude oil consumer and importer in the world. Thirdly, SC provides great price discovery platform during Asian hours. And even for Brent and WTI, if we compare the trading volume contributed by Asian hours out of the whole day, the contribution ratio have increased by 64% and 82% respectively, compared with the time that SC was listed. And finally, we have formed a multi-layered derivatives market and instruments, providing a one-stop solution to global investors. So besides crude oil futures, we have crude oil options, and we also have small tools like TAS, pricing tools like monthly average settlement price provided to the market. And we also have downstream products such as fuel oil and bitumen. So we provide a comprehensive and multi-dimensional risk management tool. So besides energy products, copper is also a product of common interest among overseas investors. SHFE's copper futures and options and INE's bonded copper futures are now open to QFIs. There are three main copper future markets internationally, namely LME, CME, and SHFE. Asia is the world's largest producing and consuming region for refined copper, with China being the main growth driver, accounting for 41% of global production and 51% of global consumption. Since SHFE listed its copper since 1993, it has been running smoothly for nearly 3 decades, serving as a pricing benchmark for domestic copper physical trades. According to FIA in 2021, SHFE copper futures and INE copper futures ranked first and fifth among similar copper contracts globally by trading volume. Regarding internationalization of copper futures, we have adopted a dual contract model. SHFE's CU contract is based on tax-included market, which means CU price includes tariff and VAT, reflecting the demand-supply relationship of domestic market. And INE's BC is based on the bonded market outside of the customs border, so its price excludes tariff and VAT, reflecting the international market supply and demand. So the dual contract model can better serve the price risk management needs of both domestic and international industries. The chart on the left compares the BC and CU contract. We see quite a lot of investors also doing arbitrage between CU and BC, and also between BC and overseas copper futures like LME copper. Okay, so finally, if you have any questions, please contact us, and here is our contact information. Also, in the bottom right corner of the page, there is a QR code for INE's mailing list. Subscribers can receive INE's monthly reports and reminder of investor education events. Thank you very much. That's all for today, and I will pass the mic back to the host.